The Treasury didn't have to pay as much, it turns out, for the 6 months as they were expecting, or as traders were expecting, but had to pay a little more for the 3 months. What really can we tell about the pricing here?
Yeah, well, I think a big part of it is that there's just a lot of that 3-month bill. You know, the Treasury Department needs to pay for tax refunds this time of year. They have a lot of spending. February and March are the biggest deficit months, so it's not surprising that they've had to increase those that issuance. And in order to get there, we've had to cheapen up that part of the market just a little bit in order to make sure that the auction's cleared.
So 6 basis points versus the prior auction for the 6 month. Is that a big move up? It feels like at that part of the curve, it probably is, Ira.
Well, part of it is, at least a couple of basis points of that is actually because we're getting closer to the March Fed meeting when the Fed is expected to hike rates. So when you think about what a 3-month T-bill is, that's basically should be the average of what the Fed funds rate is going to be over the next 3 months. And as you get closer, you should see 3-month T-bill yields edge up just a little bit. But it's even more probably than it should have been. So while it should have been probably 2 basis points, it was that extra 4 basis points, I think, was very much supply related.
Ira, does this tell us anything about what we can expect from the 2-year auction?
Not a lot, really, because there are 2 different investor bases, generally speaking. So 2-year auctions tend to get taken down a lot by central banks and also mutual funds and other asset managers who have longer maturity mandates, whereas T-bills are really a money market product that's bought by corporate treasurers and also money market mutual funds. Now, one of the interesting things is money market mutual funds have transitioned, at least for institutional funds, from prime funds that used to buy commercial paper into T-bills. So some of this T-bill supply is going to be taken down because of basically structural changes thanks to new regulations that these money market funds have to deal with.
Do foreigners tend to pick up any of these very short-term bills at all, Ira?
Yeah, definitely some of them, but they tend to be very flat. Unfortunately, we don't get that data for another couple of weeks. So the Treasury Department releases what they call the allotment data a little bit later. But generally the front end, so T-bills, 2-year notes, 3-year notes, they often have pretty high foreign participation versus, say, longer-term securities, which tend to have somewhat less.
Ira, we're back into curve flattening, at least if you look at the 2s, 10s. Is Bloomberg Intelligence forecasting more of that to come, and why?
Yeah, we are, and I think one of the big things that we look at is what's the expectations for hikes in 2019, and right now we're only pricing about 1 hike in all of 2019. So if we start pricing in for 2 or 3 hikes next year, then that's going to continue to pressure the front end, along with all of this supply. You know, this is only the beginning of additional supply in 2-year and 3-year notes. So as we get more supply, that should put yields up as well.